My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer. I'll be able to make friends. I'm just trying to make you some money. My job is not just to entertain you, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. The stock market is supposed to be a forecasting machine. Generally, stocks reflect what the economy might look like in 6 months. And as an investor, you have to anticipate what will work in that time frame and what won't. But after another shocking day, particularly for the sell in May and go away crowd, where the recovery stocks roared, the Dow gaining 533 points, S&P climbing 1.48%, NASDAQ advancing just 0.77%, the market does not lend itself to that easy divining. Right now, the future's too binary. So the market feels much more like a horse race where there can be only one winner in a very crowded field of contenders. But it's a long race, and we're still far from the home stretch. So it could go either way. All right, who's running in this race? The first group is a subset of the Cramer COVID Index, the stocks that enable the stay-at-home economy. Think everything from Zoom video to Papa John's Domino's. Hey, by the way, Papa John's put up a stunning number, 33% same-store sales. Unheard of numbers, so that's good news for that horse. Second group, the recession-proof stocks, mainly the food and the consumer packaged good plays, especially the ones that make cleaning or personal hygiene supplies. These staples all thrived during the lockdown, and of course, because of worries about COVID. Hey, but COVID may be waning. Lockdown's ending. Third, you've got the industrials. They're the companies that manufacture everything from chemicals to paper boxes to machine tools to steel to airplanes. Well, they've been to scratch for weeks, but now they're back on track. And how about that 737 MAX that they've restarted that lineup at Boeing? Fourth, there's the beaten down nag that represents the travel and leisure cohort, including the airlines and all things tourism. Many thought these needed to be put down because of the pandemic, but turns out they're not even lame. Fifth horse, the drug stocks, especially the ones that are working on a cure or a vaccine for COVID-19. They're lathered. They're ready. Six, retail and restaurants, the ones forbidden fruit that are now open for business, maiden claimers, we call them. Seventh is pure tech, the semis, the softwares, and the cyber securities. Well, they're stalwarts. The eighth horse, home and home improvement, didn't even know it'd make it into this derby. Ninth, the financials, especially the banks, didn't even know they could still run until yesterday. And again today, I thought they had pulled up lame. And finally, there's 10th. There's FAANG, Facebook, Amazon, Apple, Netflix, and Alphabet. Hybrid big tech companies that trade together because they're in the same ETS. Perennial first-place finishers, triple crowns all. What's incredible is that this is a long race, people. It's longer even than the Belmont Stakes. So long that it's actually a multi-quarter affair. But there can only be one winner that pays big, but there are place and show stocks that are going to give you good return. Remember, I said the stocks predict a 6 months out future, so this is a gigantic number of furlongs just to even get to the far turn, let alone the home stretch. Sure, you can make a field bet on every horse. That's called the S&P 500 because you want to capture the returns from both the good and bad horses. All groups traded up today. But you know, I'm talking about a winner-take-all race, and the S&P simply won't make as much money as picking the win, place, and show of this group. Of course, picking winners is hard. There are horses that are in the lead right now, but they could finish dead last when this race is over. But there'll be another right after that. First, who's in the lead? At the moment, believe it or not, it's the industrials in first, the banks in second, travel, leisure third, retail and restaurants fourth, technology coming in hard at fifth. Helped by a midday pre-announcement from Micron. Halsey at 6, but then after the bell, we got a great number from Toll Brothers. So it's a close pack, and that makes sense because right now this track belongs to all the companies that thrive in a low-interest rate environment where the future looks better than the past because we're opening America. We've heard from the industrials that things aren't as dire as they seem not that just a few weeks ago. As for the banks, J.P. Morgan's Jamie Dimon just came out yesterday. It was an amazing speech. He said we could be in for a quick recovery, something that would have seemed borderline impossible, if not Looney Tune, a few weeks ago. Travel and leisure. When you hear about theme parks reopening, when beaches are packed, it makes sense that these stocks would actually catch fire. Hey, it doesn't hurt that the group's jockey, Doug Parker from American Airlines, says the worst is over. Said it this afternoon. No wonder we learned this evening that Boeing is starting up that MAX line. Oh, and there's the cruise lines. Unsinkable numbers. Numbers that wouldn't exist if the Fed hadn't backstopped the credit, though. What about fourth place? Retail and restaurants. This is complicated. Most of these companies have been shut down since March when COVID-19 turned into a genuine pandemic. Macy's, Nordstrom, Kohl's shined again today. Why not? They're allowed to be open. Tech. It wasn't going anywhere until Micron pre-announced at midday and ignited a bunch of the industrial-oriented chip stocks. But this group could get a big boost from Workday, which had a terrific set of numbers this very evening. And we will speak to CEO Neil Bushry in a few moments about why that number was so strong. Finally, housing soaring because interest rates are low and people who live in cities are still eager to flee to the suburbs in response to the virus. This has actually got a name. It's called the counter-urban trade. Now, housing's moving away from the pack with these numbers. Again, Toll Brothers after the close. Now, what makes this race so hard to figure out is that the stay-at-home stocks are very much in the pack with these incredible numbers from Domino's and Papa John's. Recession-proof stocks are hanging in there but have no real oomph. Healthcare. Here's curious. After all that vaccine hubbub, this is a bad group. Finally, FAANG is either biding its time here or maybe it's becoming a bitter disappointment. Is something wrong? It's all everyone seems to want to know. Now, I know how it looks. For the most part, the lead horses are recovery plays. They're fueled by a belief that the grand reopening is off to a great start, so you have to abandon safety, go all in. Maybe we get a vaccine sooner than expected. Fauci's talking about November, December. Maybe we can reopen safely as long as people wear masks. Either way, a lot of people are betting that we could go back to normal sooner than expected. The laggards are losing because who needs these steady Eddie stocks when the economy's about to blast off? Anything great like Domino's or Papa John's dismissed as last good numbers they'll have. Funny thing, though, I'm betting the field will be spread out by the time we get to the home stretch, and many of the current winners will fall behind. Why? Because right now the bulls are focused on the wrong problem. I think they're confused. It's one thing to believe we're going to conquer COVID, and that will allow the economy to come roaring back. It's another thing entirely if you open up the economy and things are better, but we're still plagued by horrific levels of unemployment. That's what you have to focus on. It's not enough just to beat the virus, people. Every horse in that front pack also needs the economy to get so strong that we beat sky-high unemployment. Neither of these things is a sure thing. The triple V horses, that's what I'm calling them, triple V. That's the V-shaped recovery, the vaccine invented, V for victory, might not even show, let alone place, if unemployment stays in double digits. That's why I'm betting on the stay-at-home tech stocks. Even though we'll be able to go back to work at the office, I think it'll never be the same now these companies have seen how much money they can save with remote work. I like FAANG, too, which tends to thrive in a slow economy. And, yes, I think a slow economy is more likely than a rapid recovery. Hey, this market's ignoring what happens when the bountiful unemployment benefits and paycheck protection program runs out over the summer, triggering a wave of small business bankruptcies. Bottom line, listen, I want to believe we'll have an amazing rebound. The recovery stocks will lead us all the way to the finish line. It would make a great Cinderella story. But there's only one secretariat of people, and I think that's FAANG. Even though the mega-cap techs are in last place now, they're the ones I'll bet. I bet as people realize the economy looks a lot uglier once the stimulus goes away. No, the FAANG stocks won't win going away as usual. Could be a photo finish. But they always own the home stretch. Vince in New Jersey. Vince!
Hey, Jim, how you doing, buddy?
I'm doing well. How about you, partner?
Good. Thanks for taking my call, and thanks for making me money.
Let's go to work.
Hey, Jim, I recently picked up some Planet Fitness. Now, being some states have opened up some gyms, do you see some upside to this stock, and could I add to it?
I was a skeptic, okay? And then we had Chris Rondo on, the CEO, and I became a believer. And I think you're going to make money with that. Let's go to Ryan in Texas. Ryan.
Booyah, Jim. How's it going?
Pretty good day. How about you, Ryan? When the averages are up, people are happy. Well, how can I help?
Hey, so today Costco came out with an auto program incentive on Chevy trucks and SUVs, allowing members $1,000 off purchase or lease on new 2019 and 20 vehicles. Now, Costco tomorrow reports after close. Is now a good time to buy, or what?
Okay, I'm going to tell you, my travel trust owns Costco. I think the world, these guys went out to see them. But this was the quarter where they instituted a mask. Remember, they are a mask-only place now. And there are people who hate that. I think it's great, but people hate it. I think the quarter may not be what you think. Let's wait until Thursday. Let's go to Brian, North Carolina. Brian.
Hey, Jim. It's Brian from Huntersville, North Carolina. How you doing?
Oh, I'm doing well. How about you?
Doing good, doing good. Hey, Jim, huge fan. And, I just want to thank you. You've done so much for so many.
Oh, thanks, man.
And, it's been years we've been watching you. So.
Thank you. I appreciate that. Thank you very much.
Yeah. Okay, so here's my question. So the sector recently hit a 52-week low, had a huge bounce in the past 2 weeks. You said you're a huge fan of the new CEO, Charlie Scharf. Is it time to buy Wells Fargo?
Well, I mean, Charlie would tell me because he's a tough guy. Jim, the time to buy it was last week when the stock was at 23. That's Charlie with that dry sense of humor. I would say that you got to wait for it to pull back because it just went up 4 straight points. But I'd rather bet with Charlie than against him. It's daunting because the bank stocks are so bad. But Charlie Scharf is that good. Now, I want to believe we'll have a terrific rebound and the recovery stocks will soar, but I think, guess what? I know it's boring. I know it's repetitive. I don't care. Bang will own the home stretch on Mad Money tonight. HP just reported at the close. With more working from home for people, is it bringing profits? I got the CEO. Then I'm pointing out 2 stocks that are not as they seem. I'll reveal the names and what it means for your money. And I'm talking to the CEO of Workday after earnings that look fabulous. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.